season, and we're going to have a conversation about how we can maximize our deductions and reduce our tax liability and set ourselves up for a tax return. But before we get started, I want to eradicate a couple of myths about filing your taxes as an entrepreneur, whether you're a new entrepreneur or whether you're a seasoned entrepreneur. One thing you must always understand is that the tax code was set up for owners to win and employees to pay. Let me say that one more time for people in the back. I said the tax code was set up for owners to win and employees to pay. Professor Keys, what do you mean? This is what I mean. When you work a W-2 job, before that check hits your checking account, before you get that DD, before you get that direct deposit, guess what? Your federal taxes, they've been paid, right? Social Security, Medicare, all of that has come out of your taxes, then it hits your account. And in the event that you decide to do responsible things, right? Like pay for food, pay for fuel, pay for transportation, you will get taxed again. So that means that you're getting taxed before your check hits your checking account. That's direct deposit. And then you're getting taxed for those services and products that you buy in daily life. When we talk about the tax code being set up for owners to win, there are certain expenses that you incur on a daily basis that can be write-offs if you're a business owner, but that can be expenses and additional tax bill if you are not. This includes your cell phone bill. This includes your laptop. This includes the ring light that you bought because you wanted to get up on a Zoom call and not have people be like, where is she? All I see is a shadow, no shade, right? That includes your internet, right? The internet that you're using a little bit more because perhaps you're working more hours from home. There are things that you can deduct as a business owner that are illegal to deduct as an individual. And as you live your life every single day, you are incurring expenses, mileage, if you decide to drive from point A to point B, that can be deducted. Being in your home office, right? You in your home office as a W-2, the government doesn't respect that. Being in your home office as an entrepreneur, that's a deduction. We're going to talk about the differences between the two tonight, and we're going to highlight and punctuate the dollars that you can subtract from your income in such a way that Sam, your uncle, doesn't believe that you work for your job, work for yourself, and work for him. We are free. This is an economically emancipated conversation, and you are invited. Now, let's go ahead and get started with some do's and don'ts, some questions that I saw down in the comments section today. The first thing that I saw was, well, I started a business this year. I saw the payment protection program. I saw the economic injury disaster loan, and they were giving all of this money away to small businesses like Shake Shack and the NBA and Joel Osteen. That was a joke because they're not small businesses. How can I start my business and get a piece of the cheddar, get a piece of the chicken, right? You can still file your business losses as deductions even if your business did not gross any revenue. Let me say that one more time. You can have $0 in sales as a business and still incur losses and write them off. If you incur losses as an individual, try to write those off on your taxes if you want to. It might be a little problematic. And this is one of the reasons why the tax code reward business owners, because yes, as you're starting your business, as you're starting to operate it, it's going to take expenses. It's going to take some of your capital to get it started. So if you started a business and you're listening to this and you're saying, you know what, I didn't make any sales. Is this benefit available to me? Absolutely. It is. And the IRS allows you to gross $0 in revenue for 3 to 5 years before they reclassify you as a disregarded entity. And simply what that means is that you are no longer a business owner, you are a hobbyist, right? Y'all know my philosophy. If you're not selling a product or service that people want to buy, you do not have a business, you have a hobby. And that's what the IRS will classify your non-revenue generating business, as a hobby. But if this is your first year operating your business, guess what? You have a few years before the IRS calls you a hobbyist. Secondly, I get questions about, well, I'm not an LLC. You know, being an LLC owner right now, it is popping on the internet. It's LLC this, LLC that, and I applaud it 100%. A LLC is a limited liability company, and what it does is it protects your personal assets and allows you to operate your business in such a way that if something was to happen and you get sued, if the party suing you prevails, they can't come take your house and your car. They can only have access to what the business owns, right? So limited liability. It limits your exposure as a liability as a person and classifies you as an individual as a business. But what if you were not an LLC? Are these benefits available to you? Professor Keys, you said that I could write off $25,000. I like the LLC post, but I'm not an LLC. Yes, you can. You could be a sole proprietor. And that simply means that you have something to sell. Where's Poochie Pooch? You got something to sell, you know? You sell it. Hey, Pooch is $500. You want Pooch to be your Pooch? $500. Here you go. I give you Pooch, you give me $500. I'm not an LLC. I'm just a person doing business. As long as I report my earnings on my tax paperwork, it counts. Independent contractors. So if you drive Uber, if you drive for Lyft, if you're TaskRabbit, okay, if you're doing handy, so if you are a 1099 independent contractor, the government classifies you as a self-employed individual. So this applies to you as well. You can take the expenses that you incur and you can deduct that on your taxes. So I don't want you to exclude yourself because you haven't registered your business as an LLC with your state. There are still benefits available to you, okay? Next, your expenses must be ordinary and necessary. So before we start going into the details of my 10 deductions, and they're going really fast, your expenses have to be ordinary and necessary. So you can't be opening a catering business and one of your expenses is 15 trips to Brazil, right? So you can do some market research, beachside. Ain't no client nowhere. Ain't no client nowhere. Ain't no food nowhere that you cooked. It must be ordinary and necessary and relevant to your business, okay? And then finally, I want to talk about the forms that you fill out, okay? I want you to be not deterred by thinking through the different forms and legal terminology that you will hear during tax time. So you'll hear Schedule C's, Schedule K1s, 1099s, 1040s, profit loss forms. You're going to hear about all of these different types of forms. But what we want to focus on first is making sure that we have a strong foundation. And that foundation is being able to identify those areas in our life that can be written off as expenses and classifying them in such a way that when we compile that information, whether we decide to hand it over to an accountant or we decide to file our taxes ourselves through tax software, we're able to do that, okay? So let's get started. Y'all ready? We up for the first tax deduction. If you started an LLC this year, you can write off your LLC filing fees. I know that this is going to be a wonderful news for people who live in New York and California, because New York and California, the way your filing fees are set up, child, snatches my edges every single time I see it. It's in the hundreds of dollars. So if you still have your receipt from when you filed your paperwork with the state corporation commission within your state, or whether you used LegalZoom or Rocket Lawyer, save those receipts because they can be used as deductions. These are called startup costs. So you are starting up your business, and in doing so, you are incurring costs. The government wants to make sure that you can subtract that from whatever income you have earned, thus reducing your tax liability. Any licensing fees that you incurred this year, right? You doing hair, you should have a license. If you're putting your hands up in hair, you best to have a license. If you're cooking food in your kitchen, I know it's delicious, honey. I know you put your foot all the way in your collard greens. You put your foot all the way in your potato salad, but guess what? I hope you have a license. That's what they're for. And I understand that licenses are an additional expense and they get in the way of you being able to transact business, but business licenses protect you, right? In the event that there are any type of legal issues, they also make sure that you're in compliance with the state. So when people eat your collard greens, they know that you put your foot hypothetically in your collard greens and you didn't actually dip your toe in there. Realistically, we don't want to taste toe. We want to taste collards. So your business license, whatever you pay for that, can be deducted, all right, from your taxes. So whatever expenses you incurred, again, you can subtract that from the income that you've owned. That's decreasing your tax liability. And for those of you all who are starting a business and you're seeing how expensive it is just to file your paperwork for an LLC, just to get a business license, I want you to understand that there is a reprieve at the end of your tax year as long as you keep your business receipts. So you want to be responsible, okay? So let's keep going. The second one that I like a lot is your home office. Y'all, I'm in my home office right now. Sam, your uncle, I hope that you're looking because this particular deduction is coming in on my taxes this year, boo. Hello. So your home office. Now, here's where people get things confused with their home office. They believe their home office is wherever they do work from home. And that's simply not the case. All right, it's not the case. So if you're in your living room and you have your laptop and you're Netflixing and you're chilling with bae, that's not your home office because it's your living room. And in your living room, yes, you can do work, but in your living room, guess what? You can chat with friends, you can host company, you can kiss all up on bae, you can look at Netflix, Netflix can look at you. You already know how Netflix do. Netflix be trying to play people all the time. As soon as you start closing your eyes just a little bit, they'll be like, are you watching me, Netflix? Netflix, do your job. This is why I pay you on a monthly fee. If I want to shut my eyes for a few minutes, you just keep doing what you're doing. I'm going to do what I'm doing over here. But if you use any other place within your house for purposes that are not business, that does not qualify as your home office. So you want to find a place in your house, or you want to think about a place within your house that you use to transact business. How does that look? This is where you took Zoom calls, right? Any Zoom consulting calls. This is where you packaged your inventory. This is where you recorded your IG Reels, and your IG Reels are your marketing and your advertising. This is where you did your business research. This is a place that is used exclusively for business. And the way that the standard deduction is set up is that you can take $5, multiply it per square foot of your home office all the way up to 300 square feet. And for those of you all who have a calculator, that means that if you have 200 square feet, multiply that by 5, that's 1,000. If you have a 300 square foot office and you multiply that by 5, that is a $1,500 deduction. Now, I'm going to draw a direct line between how that benefits an entrepreneur and doesn't benefit an employee. A lot of us had to leave office. We had to tell Karen, goodbye, girl. I might see you in 2021. I might see you in 2022. I'm not going to miss you. I'll see you on Zoom. I'm not going to miss you, but I got to go home, child. I got to get my peace of mind, right? I'll see you on Outlook. I'll see you on the email, but I'm not going to see you in the office. May the Lord be praised. You and Bob gone, right? So, but you went home. And if you were a business owner, let's say you had a side hustle, but you also worked a W-2, you also had a 9-to-5. If you did your side business in your home office is a deduction. But if you were simply a W-2 and you did not own a business, even though you were working from home, many states said, yes, you work from home, but where you get your benefit is from your employer. When you are an entrepreneur, you can be the hand that feeds you. Because some employers might be like, you just need to be lucky that you're working from home and you still getting paid. There is no deduction for you working from your home office, understanding that you can't come in. But as an entrepreneur, your home office becomes a benefit. As an employee, it could essentially become a liability. And that's why becoming an entrepreneur, when you become an entrepreneur, there are more tax benefits available to you than not. And being in a pandemic, a lot of people are starting to understand that more and more. Okay? Make sense? Let's keep going. The second benefit is mileage, right? If you're going from point A to point B and you are in a moving vehicle, whether that be your car, whether that be your truck, whether that be the caddy, right, with the Lambo doors, if you are in transit, okay, you are in transit in your vehicle, you can count your mileage. Now, before I go through the standard deduction for a mileage, most people ask me, well, hey, yo, kids, when I get in the car, I'm just trying to turn my little Spotify up, right? If you like me, I just like to put my foot up on a joint, put one little hand on the steering wheel. I'm just trying to go. I'm not trying to sit up here and count my miles. I'm trying to feel the vibe. I'm trying to put the window down. See what's up. What's good, right? But let me tell you the benefit of counting your miles. When you can separate your business miles from your total miles, then there is a business deduction that is available to you where you can take every mile that you drive and multiply it by 57.5 cents. If somebody told you that you could get paid or you can get your money back for every mile that you drive, I bet all of you all would be trying to count your miles before you even got in your car. Now, there are several applications that help you count your miles. And essentially what these applications do is they can help you determine what miles you're driving for business. And we're going to get into the details of that, okay? So the first thing that you want to do at the beginning of every year, what I do is I get a pad and pen, because I don't normally have my laptop in the car, and I write down where my mileage is at the beginning of the year. That eventually is transferred over to a spreadsheet, okay? And then whenever I'm about to make a trip, whenever I'm about to make a run for my business, I use Mileage IQ, all right? So that's an application that you can turn on whenever you're about to make a trip on behalf of your business. But there's also Everlands, there's also Stride, there's also TripLog. All you have to do is Google what application is best for you to track your mileage, all right? And when you track your mileage, some of the trips that you can take, if you're going to visit a client or a customer, all right, you can deduct your trip from your house to their house. And this is where family business comes into play. If you started an LLC, a multi-member LLC, and your mama is a member of your LLC, your sister is a member of your LLC, and you're driving over their house, beep, beep. Yeah, you want to talk about your man, you want to talk about your wedding, you want to talk about your baby, talk about business. Then it becomes a business trip, okay? Also, if you're going to meet with your accountant, you're going to meet with your attorney. Sometimes when we're meeting with professionals like that, we have business on the mind, but keep business miles on the mind. That's another thing that you can deduct. If you're going to the bank to deposit a check, if you're going to pick up inventory, if there's any real estate agents who are watching this live, whenever you're driving your clients to and from your listings, guess what? That's mileage that you can deduct from your income at the end of the year. And if you're watching this, and you're an Uber driver, and you're a Lyft driver, or you work handy, so you go and you fix things in people's homes, all right? You want to make sure that you're tracking your mileage, because as an independent contractor, as self-employed independent contractor, you don't get the benefit of personal leave, you do not get the benefit of vacation leave, you do not get the benefit of a 401k or a 403b or a thrift savings plans, a TSP. So when we talk about you tracking your deductions, what you're doing is giving yourself the benefit that an employer won't. If your main function of your business involves you getting into a vehicle and going from point A to point B, I want you to track those miles, and for 2020, you're going to multiply that by 57.5 cents. Now, in the example that I provided earlier in my tweet deck, I did 14,000 miles. In the pandemic, a lot of you all weren't getting on a plane. Y'all weren't getting on the train, and we could talk about business trips too. But like, I did a lot of driving for business this year, because my behind, let me tell you something. I didn't want to be quadruple masked up in the plane, inhaling recycled air. No shade to those who did, okay? But 14,000 miles multiplied by 0.575, so 57.5 cents, I rounded up to 58 cents, is $8,120. Tell me the last time that your company paid you $8,100 just to go to and fro. Now, the only time that this particular deduction is not applicable is when you're driving to and from your office, okay? So if you're a W-2 employee and you got to go in and out of work, guess what? That's one of the setbacks of filing taxes as an individual. Uncle Sam don't care if you're going to and from work. He wants you to go to work, incur all the expenses, and pay him before your direct deposit and during tax time. But also as an entrepreneur, if you're driving to and from your business location, so let's say you have a brick and mortar, that's also not a write-off. But when you're going to do business outside of that particular location, it is, okay? Now, I wasn't planning on talking about this, but I also want to just quickly talk about business trips, all right? Business trips. So whenever you are traveling somewhere where you are going to be out of town for longer than the normal workday, which is 8 hours, which is usually an overnight trip, if you spend more than half of that trip Transacting business or attempting to make a sale, it is a business trip. How does this work when you start talking about doing business in exotic places? Let's say that you decide to take a trip to Johannesburg, South Africa, one of my favorite places to visit. You come up with an itinerary to meet with people in Johannesburg, right? You have a whole list of clients that you want to meet with while you're over there. The great thing about traveling internationally, even traveling around the state, one travel day actually counts as a business day. So if you're going on a 7-day trip and it takes you a day to get to Johannesburg and a day to get home, that's 2 days of doing business. That's why a lot of people take international trips and transact business while they're there. Now, 2 minus 7 is 5 days left, okay? So now you got 5 days. You need to spend what? 2 days doing business in Johannesburg, and the rest of the days that you're there, you can go to the Apartheid Museum, you can go to Mandela House, you can go to Soweto. It's a way for your business to essentially qualify a business trip while taking 2 days vacation, and for Uncle Sam to reimburse you for that during tax time, okay? So business trips, as long as more than 50% of that trip is spent doing business, then Uncle Sam doesn't care what you do with the rest of the 49% because you went there with the intent to make money, okay? So let's keep going. I got one more thing to say about deductions as it relates to travel. With the standard mileage deduction, which we talked about just a few minutes ago, so that's every mileage you drive for business, you multiply that by 57.5 cents. You can also deduct your parking. Anybody who lives in metropolitan areas knows that parking can cost you 15% of a whole paycheck. And they always get you with those little signs, don't they? Be like, come on in here, $5 for the first 2 minutes. Minute 3 through whenever you decide to get your car, $50. Easy. New York City, easy. DC, easy. That's why I went to go visit my best friend in Atlanta. They said, oh, to park here, baby, it costs $3. I was like, for how many minutes? They were like, for a few hours. So like parking, if you are parked somewhere and you have to go into an office building to transact business, though, that parking expense that you incur, again, that's something that you can subtract at the end of the year. And finally, I want to talk about tolls. Now, I know some of y'all, you know a toll road is coming up. You got the whole Easy Pass up on your windshield. And just because you know it's a toll road, you're going to drive 30 miles out the way. You told your boy, you told your boo thing, you was going to be there at 6 o'clock. You see a toll road, you get there at 7:30, talking about CP time. We said we weren't doing that, right? We on WP time. We on wealthy people's time because you didn't want to spend $1.50 at the toll. Well, if you're going to visit boo thing to talk about business, right? Date an asset, marry an asset, have asset babies, and build an asset-rich legacy. So you want to talk about to your boo thing about your business, then guess what? The toll that you incur going to meet with him on time is something that you can write off on your taxes, okay? So I want you to keep that in mind because, again, these are things that we incur, right? We just think, hey, I have to park my car somewhere, so I have a parking expense. I guess I'm going to have to pay this out of pocket and just eat the cost. No. Call up Sam, your uncle, during tax time and be like, hey, remember that this $1,500 in parking fees that I got last year? Yeah. I'm coming to see what's up. I'm coming to say what's up. So let's keep going. Next, I want to talk about technology because especially during this digital age, right? During this time where all of us are pivoting as entrepreneurs and trying to figure out how we can do business effectively in a new economy, we're starting to lean heavily in the technical space, right? So that includes software, that also includes hardware. For a lot of business owners, we're paying subscription fees in order to make sure that our business is maintained. This also includes new businesses. Perhaps you started a business and you want a web presence, right? So you bought your domain from GoDaddy, you created your website in Wix or Squarespace, and now you're paying a monthly fee in order to maintain that. That is a deduction, okay? It's a deduction. If you are using Shopify, so if you have an online store, if you have an apparel store, right? So you're paying Printful and Printify so that they can fulfill your orders, but you're marketing your designs through Shopify and you're paying Shopify a monthly fee, That's a deduction. You're paying Printful and Printify a fee just so they can fulfill your orders. Again, you want to make sure that you make a list of all of those expenses. And the great things about those sites is that you can always go pull your statements at the end of the year and see what you spent for 12 months, 6 months, 9 months. If you have Dropbox, that's a great way for people to share files, right? A lot of people forget Dropbox can be a business expense. How do people send large files to you, and how do you maintain them so they don't take up so much space in your Google Drive? Dropbox, GoDaddy, G Suite, right? So you have the domain name, but now you're not holla at me at kmw@gmail.com, but now it's kmw@kmw.com, right? You have to make sure that you have a backend that supports the creation of those emails, but what comes with that is a monthly fee. So you want to make sure that you go and you make an inventory of all the subscriptions that you pay for, because sometimes the cost seems so nominal, right? They're like, oh, it's just $4.99. Oh, it's just $5.99. Oh, girl, it's just $12.99. Whenever anybody puts only in front of it, let me tell you something. It adds up, right? You know, when you at work and someone says, all you got to do is, whenever anybody says that, oh, girl, all you got to do is, and then they tell you the project, all you got to do is a setup. It's a setup. And whenever anybody says it's only $6.99, it's a setup, because all of those small fees add up. So make sure that you go and you check your business account, because you should have one, and you see what those monthly expenses are, right? How much are you paying every single month to own and operate your business? Let's keep going. Professional expenses, okay? If you hired an attorney this year to construct a non-compete agreement, a non-disclosure agreement, perhaps you hired an attorney to look over your LLC paperwork and also to file your LLC paperwork, guess what? That's a deduction. Attorneys are expensive because their expertise helps keep us out of court if we hire a good one, all right? So you want to make sure that you keep that invoice, right? If you have an attorney on retainer, keep that invoice so that you can make sure to account for that on your taxes at the end of the year. Same thing goes with your accountant or your tax software. My accountant with some tax software. I'm like, hold on, I'm not making $100,000 yet several years ago. If I can't afford an accountant, I can afford this software. Mr. only $29.99 a month. Okay, tax software, I hear you. I know it adds up. But you want to make sure that you write that off, okay? Whoever your accountant is or whatever your accounting software is, make sure you write that off. And here's the benefit of being an entrepreneur and writing these off versus an individual. Individuals incur legal fees all the time. If you in a custody battle, you know how that is. If you getting a divorce right now, you know how that is. That person who's supposed to be paying you rent, your roommate, your raggedy roommate that's probably listening to this live with you, she owe you $50. She, oh, I got you next month on the rent. Well, what does that got to do with this month on the rent? Right? You don't want to end up in court. But if you do, and it's a personal expense that you have to incur, it's not a write-off. And that's the benefit of having a business, is that when someone disrespects your business, right? When someone steps over the line with your business and you have to get your attorney to boss up so you can get the money that they owe you, run you your check, guess what? It's a business expense. Just think about it. What is it like for Sam, your uncle, to be like, yeah, go ahead. Pay for that legal expense. I got you. So make sure you keep your invoices for that. Let's keep going. Y'all learning something? Is it coming together? So we talked about being able to write out your LLC fees, being able to write off your business license fees. We talked about your home office and how to fully define exactly what it means to have a home office, to be able to really dictate what that square footage is going to be. We talked about how to deduct your technical expenses, so your subscriptions and also your professional fees. And we talked about deducting mileage, parking, and also toll fees. Okay, so let's keep going. Next, what we're going to talk about is cell phone and internet and the hardware that you use to communicate. Now, I don't want none of y'all up on this live acting brand new. Because you don't use your cell phone today. You don't use your internet today to scroll. You said you was only going to be on Instagram for 2 minutes. 25 minutes later, you still scrolling. You don't even know 70 of the people whose picture you like today, but you scrolling. That's you using the internet, using your cell phone. Some of y'all on your laptop right now watching from live. That's your laptop. If you bought it as an individual and you maintained it as an individual, you pay taxes twice. Again, you paid taxes in direct deposit. And when you pulled up to the counter, an old girl said, okay, for the cell phone, it's going to be $400. $100 if it's Cricket, no shade. You know, this is how much it's going to cost for your phone. You didn't say, can you subtract the taxes and I got you? That's not the way it works. Taxes is mandatory, baby, or you got to put the phone back. You got to put the laptop back. Call up Verizon and say, charge me my internet, but can you leave the taxes out of this one? I don't want to give you the few extra dollars. See what happens. But as an entrepreneur, these become tax write-offs. So for me, when it comes down to my cell phone bill and my internet bill, I make sure that those are coming out of my business accounts. Now, let's say you're a sole proprietor. You're like, I don't have a business account. I just have my personal account. In both instances, you want to monitor the total amount of time that you spend on business calls versus personal calls. Because as entrepreneurs, we do have a personal life, right? You can't pour from an empty cup. You got to take care of you first. So you're going to talk to your man, and then you're going to talk to your client. And sometimes your man is your client, and sometimes your man or your girl, whatever, is your business partner. But every once in a while, you have to take a break. So you want to make sure that you monitor how many calls you're making for business, how many calls you're making for personal. And every single month, I do this every single month. It's just easier for me, but some people do it every quarter, so every 3 or 4 months. You want to make sure that you take your total phone bill and you multiply it by the percentage used for business. So if your cell phone bill is $150 and you spend 50% of the time talking on your phone for business, then you can write off $75 for that month. Okay? Makes sense? So you want to make sure you find that percentage used. And for those who may be thinking like, girl, you be doing too much. I got to count my miles. I got to make sure I'm doing business in the office and not watching Netflix or having Netflix watch me. And I just want to ask you, is your tax bill really worth it? Do you want to pay $1,500 in taxes? Or do you want to calculate how long you talk on the phone for business versus how long you gossip about Real Housewives of Atlanta? Okay? So make sure you keep a record of that. And when it comes to your electronics, so this year I bought an iPad. Shout out to Android. I'm still gang, okay, Android, but I couldn't get on Clubhouse without an Apple product, and Clubhouse is going to be where Professor Keys goes next to get free game. All right, I had to get an Apple product, and I did not own one, and I did not want to buy an iPhone. I bought an iPad for my business. I also use an iPad to take notes now. I also brought a new laptop because I wanted to be able to take notes, but I also wanted to be able to host my Black Wealth group calls with a better camera, better technology, all right? So when you buy electronics, so you buy your cell phone, you buy your iPad, you buy your laptop, you can choose to write that off on your taxes in 2 ways. You can take the Section 179 deduction, which means that you use it prevalently the first year which you bought it. So you can write off the entire expense in a year. So if you spend $2,000 on a laptop, you can write off $2,000 in that year if you use it for a majority of your business, right? So if you're using it 75% of your time, 80% of your time, you can write that off in the tax year. Or perhaps you know that you're going to have high future tax bills, right? So you say, I spent $2,000 on this laptop, but I want to be able to deduct the full value of it over time. That is straight line depreciation, okay? So you might take $500 deduction 2020, maybe another $500 in 2021, maybe another $500 in 2022, and maybe another $500 in 2023. And all those 500 times 4 equates to 2,000. So you're able to spread the benefit of that deduction over 4 years, or depending on how often you use that laptop, how often you use that iPad, how often you use your expensive cell phone, you can take that deduction in the tax year in which you bought it. Okay? That is Section 179 deduction and the straight line depreciation. Okay? So I want you to focus on the techniques And not necessarily the terminology. You can write it down, you can do your research, but often when we're speaking the language of wealth, people will throw different terminology: straight line, depreciation, section 179 deduction, mileage, standard deduction, or you taking an itemized deduction. We get caught up in the terminology and it causes confusion. And when it causes confusion, we decide to sit it out versus count ourselves in. But the language of wealth is what helps us, right? Understanding the language of wealth is what helps us fully participate in the action of asset acquisition and wealth accumulation. When we understand the process and then we append the terms, then we're not intimidated, right? When someone says straight line depreciation, if we're like, okay, that's deducting a little bit, just putting a little bit on it every single year, right? I'm putting a little bit on it every single year versus section 179 deduction. Shoot, I'm going all in, right? So let's keep going, because y'all know y'all get me talking. I'll have a whole sermon in here about the language of wealth. Let's talk about education, right? One of the things that I really like about the internet is the proliferation of people being willing to share their skill set in the form of online courses or in the form of consulting, right? So you can choose to consult with your favorite influencer who you respect and who is highly skilled. And they might say, book me for $50 an hour, book me for $150 an hour, book me for $300 an hour. Or they might say, you can't afford me as a consultant, but I have a course for $395 that's available. Now, is that something that you can deduct on your taxes as an entrepreneur? And the answer is absolutely yes, but only in certain instances. So I want you to pay attention to this, because it's not a yes across the board. There are caveats. So if you paid for a course to improve your existing skill set, then it's deductible. So imagine someone who does hair, right? So you do hair, you've been doing micro braids for a little bit, and somebody tapped you on the shoulder. They were like, we doing micro braids every once in a while, but for real, we on invisible braids now. So, are you gonna switch it up or no? If you're like, dang man, I was still over here micro braiding it up. I was about to throw a journal curl on it. Some people kind of stuck in the past. They can do what they can do. They can do a little condi flip, right? And they're like, no sis, we not doing the condi flip. We over here, we on the fresh press, we on the twist out. That's what we doing. So you decide to go and take a class to improve upon the existing hairstyling skills that you have. So now you're not doing micro braids, maybe you're doing faux locks, and now you're actually doing the invisible braids. It's an improvement upon an existing skill set. If you're establishing a new skill set, that's where things get complicated, right? So you're a new entrepreneur, you've been in business your second year, you're trying to learn a new skill set. It's not as black and white, right? So it must be an improvement upon an existing skill set, but you're smart. So I want you to think through how you can not classify it as a new skill, but think about yourself being highly favored. Be the entrepreneur who can do exceedingly and abundantly above all things. So every skill that you learn is just an improvement upon one that God already planted inside of you. Then it becomes a deduction. Come on, somebody. That was a whole word. Some of y'all missed it. That's okay. I'll bring it back. But also, if you need to take this course in order to keep a license, you can deduct it. Okay, so if you have a license, let's say you're a licensed food vendor, or you're a licensed hairstylist, or you're a licensed daycare specialist, and you need to take a course in order to keep your license, real estate license, right? If you need to take a course in order to keep a license that you've already earned, that can also be deducted through your business. And that is the benefit of running your life like a business owner and not necessarily like an employee and an individual. All right, you have the license, you incurred the initial expense, and now to maintain it, you write it off on your taxes as long as you keep the receipts. Okay, so I hope that was useful. I hope that helped you further contextualize how to benefit during tax time. The last thing that I'm going to talk about is independent contractors. So There are 2.56 million Black entrepreneurs according to the last census, but only 109,000 of them have the capacity to employ at least one person. I'm going to put that out there just one more time because we're not claiming that in 2022, but 2.56 million Black entrepreneurs, but only 109,000 of them are employers. That means that 2.4 million plus Black entrepreneurs are working side businesses, or their business that hasn't scaled to the point where they can employ themselves or another person. What does that mean, right? How do we contextualize this within the context of taxes? That means when you are executing your business, there are people that you need to hire in order to execute the work. Because entrepreneurs, we build systems and processes in order to sustain our business. We don't take on everything simply by ourselves because hustlers do that, right? You have to have a hustle to start your business, but if you've been operating your business for years and you're still the only person in your business doing everything, being the receptionist, being the attorney, being the CEO, being the CFO, it's cute in the first year, it's tiring in the 5th year. So you have to hire independent contractors. So when you step away from your business doesn't stop. You're a hustler if you go on vacation, and your business does too. You go to sleep, your business does too. You step away from your business, business done. You die, business die, right? Business doing what you doing. Your business should be able to operate in your absence. So for those solo entrepreneurs, meaning that you're running your business on your own, but you're learning how to scale with independent contractors before you hire employees, that expense that you incur hiring an independent contractor to execute the work is also a deduction. So that's your social media guy, right? The social media guy, he's putting together great quotes. He's out fitting it in your brand guide. That is a tax deduction, okay? The person who's your admin, right? The person who's managing your calendar, answering your emails so you can free up time to source new clients and get new cash flow. That's an independent contractor. He's not on payroll. You paying him a monthly fee to retain his services. You can write that off. If you have people who help you plan events, right? So they're not with you 9 to 5 every single day, but perhaps you're planning a virtual event and you've hired some people to help you execute. Those are independent contractors, and you can write off the expense of hiring the people that you need so you can elevate from hustler level up to entrepreneur level. That's the way that you boss up. You tell Uncle Sam, I'm not paying you. What I'm doing is I'm incurring costs, and you're going to subtract that from my tax bill at the end of the year, okay? And in the interim, I'm not going to stress myself out because I got help. Got's with an S. Now, the last thing I'll say before I wrap this up, independent contractors are just that, contractors that help your business. They're independent. You do not pay them benefits. Usually, you don't supply them with equipment. You give them guideposts, which are outlined in the contract, but they should not feel like they can get fired by you. They should feel like they can end the contract if it's not working, or you can end the contract if it's not working. It's just like a relationship, boo. You don't own me. I'm going to show up because I want to be here, and I'll leave when I want to. Okay? So those are the tax deductions that I think rest at the top of the list. Now, as an entrepreneur, you have 470 plus tax deductions that are available to you. These are just a good 5 to 10 for you to consider. We talked about 10 tonight, perhaps only 5 or 6 apply. I 100% encourage every person watching this live, even if you never wanted to be an entrepreneur, that doesn't mean that you shouldn't be a business owner. I don't want you to miss that. Even if you never wanted to be an entrepreneur, I want you to consider being a business owner, because business ownership will make sure that you keep more dollars in your pocket so you can use those dollars to buy assets that can be passed down from generation to generation to generation to generation. Okay? I love you all. I think we have 500 people in the room tonight. But until next Wednesday, I want to thank you so much for joining me. The next thing I'm going to be talking about is how you can access the PPP funds as a sole proprietor. President Biden just released new guidance in order to make it easy. So I want to walk through all the different steps that you can take to access that $20,000 plus as an entrepreneur so that we can benefit from taxes, right? Our tax write-offs and deductions and also credits. And also we can benefit from the tax money that already should be owed to us, right? But it is available to us as business owners. I love you guys. Make sure to subscribe to my YouTube. And until next Wednesday, have a great one.